Hi, it is Saturday morning, 20th of July, and it is 8 a.m. in New York. This channel is Drips Media, and I will be covering financial news from New York stock exchanges before markets open. The regular trading for the U.S. stock market opens at 9:30 a.m. My name is Daniela Drips. I will be quickly covering yesterday's closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is Drips Media, lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
All three major indices closed in the red, extending their losing streaks. The Dow Jones Industrial Average fell by 0.9% yesterday, marking its second consecutive day of losses. The index closed at 40,287.5. The S&P 500, meanwhile, slipped 0.7% to close at 5,505. This marks the third straight day of losses for the broader market index. The tech-heavy NASDAQ also continued its downward trend, closing at 17,726.9 for a 0.8% loss. This is also the NASDAQ's third consecutive day in negative territory. Investors are looking ahead to tomorrow's release of the latest economic data, including inflation figures and consumer confidence numbers. These reports could provide further clues about the direction of the economy and influence the Federal Reserve's upcoming interest rate decisions. We'll be keeping a close eye on these developments and bring you the latest analysis as it unfolds. Turning our attention now to the tech sector, where it was another mixed bag for some of the biggest names. Apple managed to eke out a small gain, with its shares closing at $224.30. This modest 0.1% uptick helped the tech giant reverse two consecutive days of losses. However, it wasn't such a rosy picture for Google and Microsoft. Google's parent company, Alphabet, saw its stock price dip slightly, closing at $177.70. This marks 4 straight days of losses for the search engine giant. Meanwhile, Microsoft also struggled, with its shares falling by 0.7% to close at $437.10. This extends the software maker's losing streak to 4 consecutive days. The performance of these tech giants highlights the continued volatility in the sector as investors weigh the impact of potential interest rate hikes and economic uncertainty. We'll continue to monitor these companies closely and bring you the latest developments. Amazon, on the other hand, experienced a different fate. The e-commerce giant saw its shares climb by 1.2% to close at $182.50. This positive performance snaps a 3-day losing streak for Amazon. Shifting gears to the energy sector, ExxonMobil saw its shares rise by 0.8% to close at $105.70. This gain comes as oil prices continue to climb amidst ongoing supply concerns. Meanwhile, Chevron, another major player in the energy industry, saw its stock price edge up by 0.5% to close at $163.90. This marks the second consecutive day of gains for Chevron. The energy sector's performance yesterday suggests that investors remain concerned about the tight supply and demand dynamics in the oil market. We'll be watching closely to see how these factors continue to influence energy prices and the broader market in the days to come. Now, let's delve into some other notable movers in the tech and consumer discretionary sectors. NVIDIA, a major player in the semiconductor industry, saw its shares tumble by 2.6% to close at $117.90. This downturn reversed the chipmaker's previous day's gains, highlighting the ongoing volatility in the tech sector. Tesla, the electric vehicle giant, also experienced a significant drop, with its shares falling by 4% to close at $239.20. This decline erased the previous day's gains for Tesla, suggesting that investors remain cautious about the company's near-term prospects. Meanwhile, Amazon continued its downward trend from the previous day, with its shares slipping by 0.3% to close at $183.10. This marks 3 consecutive days of losses for the e-commerce behemoth, indicating potential concerns about the company's growth trajectory. In contrast to Amazon's recent performance, NVIDIA, a dominant force in the semiconductor industry, faced a setback. The chipmaker's shares plummeted by 2.6% to close at $117.90. This downturn erased NVIDIA's previous day's gains, underscoring the persistent volatility within the tech sector. Looking at the bigger picture, NVIDIA's 5-day performance shows a decline of 8.8% and a 4.5% drop month to date. However, despite these recent dips, NVIDIA has seen positive growth over the past 10 days, with 4 days of gains. Year to date, NVIDIA has experienced a significant surge, boasting a 138% increase. This contrast highlights the company's overall positive trajectory despite recent market fluctuations. In the financial sector, it was a sea of red as major banks and payment processors faced headwinds. Bank of America saw its shares dip by 0.3% to close at $42.90, marking 3 consecutive days of losses. Similarly, J.P. Morgan Chase experienced a decline, with its stock price edging down by 0.1% to finish at $209.80. This marks 2 straight days of losses for the banking giant. Turning to payment processors, both MasterCard and Visa ended the day in negative territory. MasterCard shares fell by 1.1% to close at $443.70, extending its losing streak to 2 consecutive days. Visa, meanwhile, saw its stock price drop by 1.4% to end the day at $265.50, also marking its 2nd straight day of losses. Other financial institutions also felt the pressure. American Express shares tumbled by 2.7%, closing at $242.40 and marking 2 consecutive loss days. Morgan Stanley experienced a similar fate, with its stock price falling by 2.6% to close at $102.10, also representing 2 consecutive days of losses. These declines across the financial sector suggest growing concerns about the broader economic outlook and its potential impact on lending and consumer spending. Despite the recent downturn, Bank of America's performance over a broader period paints a more optimistic picture. The bank's stock has gained 3.2% over the past 5 days and an impressive 7.9% month to date. Furthermore, Bank of America has seen positive growth over the last 10 days, with 5 days of gains. Since the start of the year, Bank of America has enjoyed a robust 29% increase in its stock price. This suggests that despite the current market anxieties, investors remain confident in the bank's long-term prospects and its ability to navigate the challenges of a potentially slowing economy. Now let's shift our focus to the volatile world of cryptocurrencies, where we saw some notable movements yesterday. Bitcoin, the world's largest cryptocurrency by market value, surged by 4.1% to close at $66,614.60. This positive performance helped Bitcoin reverse its two-day losing streak, signaling renewed investor interest in the digital asset. Dogecoin, often considered a more light-hearted cryptocurrency, also experienced a significant upswing. The meme-inspired digital currency soared by 6.5% to close at 10 cents. This impressive gain helped Dogecoin break free from its three-day losing streak, demonstrating the potential for volatility and quick reversals in the crypto market. Ethereum, the second-largest cryptocurrency, continued its upward trajectory, notching its second consecutive day of gains. The blockchain platform's native token, Ether, rose by 2.3% to close at $3,505.50. This sustained positive momentum suggests growing confidence in Ethereum's technological advancements and its role in the evolving decentralized finance landscape. These gains in the cryptocurrency market suggest that investors are regaining some appetite for riskier assets, despite the broader market uncertainty. However, it's important to note that the crypto market is known for its volatility, and these gains could be quickly erased if market sentiment shifts. We'll continue to monitor the crypto space closely and bring you the latest developments as they unfold. That brings us to the end of our market roundup for today. Stay tuned for more in-depth analysis and expert commentary throughout the day. We'll be back tomorrow with a look at the latest economic data and its potential impact on the markets.